Hi guys, welcome back to the channel. My name is Dave, and today I want to talk about MLPs or Master Limited Partnerships. I've been buying these for several years now, and as someone that still works but likes some cash flow, wants it to be tax efficient, look no further than MLPs. They're pretty good options. So I'll show you what I own today. We'll talk about MLPs. If that is what you're looking for, please stick around. Whoop. So first of all, why might you consider an investment in an MLP? And for me, it's all about tax efficient cash flow. So most MLPs operate in the energy sector. These are pipeline companies doing midstream activities. And if you're looking for tax efficient cash flow in an after-tax account that's really stable, these tend to offer that. So that's why I like them, because I still work. I make a good amount of money. I'm in a high tax bracket, so I'm looking for tax-efficient cash flow in an after-tax account. These are not intended for 401k or retirement plan or anything like that, or your IRA, because you lose the tax advantage. So this is really for after-tax accounts. These are pass-through entities. Okay, so it's an MLP. You are going to get a K1. Some people don't like to handle K1s. It really doesn't bother me. I've always owned like S corporations as well. I've always had to handle K1, so it's not a big deal. For me, it's about 5 minutes once a year during tax season, but I do get it. Some people don't want to be bothered with that. But yeah, pass-through entity, so they get to pass through some of those expenses as well, like depreciation. And for that, you're going to see a large amount of return of capital when you get your K1 that you're going to be able to put onto your taxes. So for me, I want to say around 85% is typically return of capital. So it really reduces, like let's say I'm getting around 7 to 8% from these on average. Very little of that is going to go to paying taxes. So I like that. That works really well for me in my current situation. You have to decide if that works well for you. And I would say MLPs make up about 5% of my portfolio. That's probably where I would cap it at. I wouldn't go hog wild with these myself, but it's been a solid investment. I will sell puts against the MLPs that I like at times, collect some extra income. If it goes below that strike price, if these get assigned, I'll take assignment of those shares. That's fine. I'll add them to my portfolio. I'll start collecting that income, but I do not sell calls against them. I just let it ride out my portfolio, because if I sell them, that's when I'll have all that tax. I'll have to catch that back up, right? I'm going to owe tax at that point based upon my basis in the stock. So I just hold it. And there is a tax advantage to doing that down the road as well. And you can see that right here in this article on Investopedia. Here's your consequences of selling your MLP and your potential for tax avoidance. So here's how it works. As long as you don't cash out of the MLP but bequeath it to a spouse or the next generation, you won't have to pay taxes on a very low cost basis. Better yet, your heir will inherit the MLP at a higher cost basis, which gets readjusted to the market price on the date of the transfer. That's your step up in basis. So, and if your heir wants to sell the MLP right away, there will be no capital gains tax. So that works out really well for me, and that's kind of my long-term plan. So just to summarize some of this info, is an MLP right for me? Here's my checklist if I'm looking to buy an MLP. If all these check out, maybe it's worth a closer look. The most important factor is economic viability. I know that's basic, but this is me saying do your homework, do your research, understand what you're buying. In other words, any tax benefit we might get from an MLP is really secondary if the business is not performing. Next up is understanding that the focus of an MLP is cash flow. And do they have enough cash flow to support the routine distributions? We call this the distribution coverage ratio. You'll hear that a few times throughout this video. This ratio measures the MLP's ability to cover its planned distributions with cash. All right, so the higher the ratio, the greater their ability to cover those cash distributions. The three we're going to look at today are all in the range of 1.5 to 2, which means they are currently healthy. You can dig all that information up from the quarterly report, or you can click the link down below for a subscription to Seeking Alpha, where people just seem to love doing that kind of work for you. You can also find it with the Analyze with AI button if you're one of, like me, like a really lazy investor. Number 3, consider an MLP for its tax-deferred income if that is what works for your situation. I buy municipal bonds because I pay plenty of tax already. I like those municipal bonds and that tax-free status. Do the same with MLPs. It works well for my situation. Now, I would avoid putting these in a tax-advantaged retirement account, such as an IRA. You lose the tax benefits. MLBs can generate what's called UBTI, unrelated business taxable income, which can complicate the account's tax exempt status. So these are best in a taxable account, in my opinion. Of course, not tax advice. And finally, I think of these as a buy and hold strategy for myself, as I mentioned earlier. There could always be a reason to exit them, but in general, my plan is to add them and keep them. And that is because they can be passed along with your estate plan, as I showed previously, and the value can be reset to the current market value for the next generation to enjoy. At least that is the situation here in 2025, subject to change, of course. And the average distribution yield for the 3 MLPs that I currently own is right around 7.5%. After tax, I bet I keep right around 7%. Now, I did move these assets over to my income portfolio. They weren't there last year, so if you look at my list that I posted earlier this year, you wouldn't see them there, but you will see them in 2025, so we can have an idea just how tax efficient they are year to year. You can see if they are right for you. So like and subscribe if you're looking for that type of information. Now, let's jump in and take a look at these 3 MLPs. Okay, I'm going to run through these 3 fairly quickly. The first one here is ET Energy Transfer. This is one that I've owned for 5 or 6 years. It makes up probably 60% of the 3 MLPs that I own, so it's my largest position. And I've been buying it along the way. I've been selling puts, as I mentioned, adding to my position over time. All 3 of these are energy infrastructures. Think pipelines, oil and gas distribution. That's what they do. It's something that we can't do without. So it's something that's going to be there. But it does change based upon who's in power in our government as well. So there can be high tides and low tides with these as we go along. So currently this is yielding 7.7%. It's got a market cap of $58 billion, which is pretty good size for an MLP. Earnings per share, $1.40. Dividend rate, $1.32. That's great, but what you really want to find when it comes to MLPs is their distribution coverage ratio. So you want to find out what kind of distributable cash flow they have available, and you want to divide that by the total distribution they pay. And that gives you your coverage ratio. And as long as that coverage ratio is above 1 and has some padding, you're probably feeling pretty good about that position. Things can change quickly though, but that's kind of what you want to watch. And as I look down here and I see the Asian investor posting something exactly about that, 1.7x coverage. So this one and the next one I'm going to show you, they're both sitting right around 1.7x coverage, right? So that's looking pretty good. And you can jump in here and take a look at this too. One of the things I love about Seeking Alpha is the articles. So you can scroll down and you can probably find out exactly what he was doing with this. And there it is, right? Distribution coverage ratio. So going back, certainly sitting right around 1.7%, 1.7x, I should say, 170%. Of the 100% that is required to cover those distributions. So sitting pretty good right now, but that's the important number to keep in mind if you want to dive into the technicals a little bit more and find that information you can. So looking pretty good currently as far as being able to afford those dividends and distributions. Speaking of dividends, you can jump in obviously here on Seeking Alpha. Scroll down and find dividend history, and you can see that it's been consistent. You know, there was that drop off here back in 2020 for obvious reasons. They've recovered, and it's been very consistent. So that consistent distributable cash flow is what people are attracted to when it comes to these. And that's one of the reasons that I've been buying this one. So good solid MLP that I will probably continue to add to. Again, I'm capping these right around 5% within my portfolio, so it is what it is. Now, a similar, again, all these are going to be pipelines, EPD, Enterprise Product Partners. This one's yielding right around 7%, $67 billion MLP. Again, the coverage ratio on this one's, again, around 1.6%, 1.6%, I keep saying that, 1.7x, 1.6x, so well covered at the moment. You can see it's been on a little decline recently, so something to watch for. But again, this makes up my second larger holding, and I've had this one for about maybe a year and a half or so. So I haven't had it for too long in my portfolio. But again, I wanted to be a little bit more broadly diversified in MLPs, so I started adding a few others too, mixing them together. And there are funds out there that you can buy to cover MLPs as well, but I kind of like the idea of picking these individual ones and getting that K1 having all the fun with that. So that's been my tactic. And by the way, I am a Seeking Alpha affiliate, and there are affiliate links down below. So when I start talking about this analysis, again, one of my favorite things about this with Seeking Alpha is that you can dive in and see some of the research that these guys do for you and get up to speed on any of these products. So again, if you're looking for something to do stock and ETF research, go check it out. There are discount links down below. Last one here I've got for you is PAA, or Plains All American Pipeline. And this one probably just makes up 10% of my total position within MLPs. So I just recently started adding this one probably at the beginning of the summer this year. This one's a smaller one, $12 billion market cap. This one's yielding around 9% currently, so it's getting up there. But yeah, again, for me, I'm just trying to mix and match a little bit between these three. So relatively new position for me. Again, we can look at the dividends. We can see dividend history here. They've been growing their dividends. So that distribution looks pretty good right now, pretty healthy, pretty large and in charge. We'll see if they can sustain that as we go along. But yeah, if you're looking for tax efficient distributions in a taxable account, check out MLPs. So that's a quick look at my 3 MLPs. I almost have myself convinced to go buy more tomorrow. I just might. I do like these. I think they work really well. They function really well within my portfolio for where I'm at right now. Let me know what you think about these down below. If you have any questions, like and subscribe, and maybe you can go check out one of these videos next. Have a great night. We'll see you soon. Take care. Whoop.